Hi everyone, I'm Ken from CryptoTradingKS, the inventor of CTKS Method and BORSOG trading. If you're new, a very warm welcome and welcome back KS family. And please note, I don't have WhatsApp or Telegram. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Let's run the numbers. Bitcoin is currently down 0.82% to 16,771. Ethereum is down 0.74% to 1209. We can see that the options market threw a fairly reasonable signal on where Bitcoin's price momentum was actually going. Bitcoin is currently trading at 16,779. In yesterday's video, we were traveling about up here, nearly 17,000, well 16,900. Max Payne indicated 16,750, and we saw that actual price came down. The next day's Max Payne was 16,000, quite a drop, but it's since changed up to 16,500 with the very large options expiration of 247 million just in a couple of days' time at Max Payne level of 17,000. This was the arc yesterday. What is the arc today? If Bitcoin's price follows Max Payne, we would expect another leg down to around 16.5 and then a recovery up to the 17,000. That's if. Sometimes Max Payne is a good predictor, other times not so much. It just follows price. So just be aware that Max Payne can be good, but it's certainly not 100% predictive. Going back several days, when we first started drawing in these Max Payne arcs, we noticed what Max Payne was doing. This particular price action on the 18th tracked quite well. And what happened the next day? The next day, the Max Payne levels came up, and then we saw a fairly good 24-hour window of predictability. What about the next day? The next day, we saw prices come down to that Max Payne level. So are we looking at the Max Payne levels being obeyed or disobeyed? As professionals, we don't really care because we have the requirement to not require certainty. In truth, you don't need certainty, you just need a strategy to profit from uncertainty. If the markets were always certain, if they always paid out, everybody would be a trillionaire. Of course, the markets don't do that. This is why, as professionals, we understand that we control the trade or investment, but the market controls the return. We do our CTKS code every single day because it gives us an insight into where the markets could go. With the Max Payne analysis in the crypto market, the market has come down in the past 24 hours, so the code would start with a D. Just put a pipe in it, and then the next 24 hours, Max Payne is predicting a movement down. That's just Max Payne, that's just one data point. So we could say down, say 50% probability. Just at the moment, we're going to be stacking probabilities. This particular area is how your portfolio would behave if the market came down. What percentage of your portfolio would come down, go neutral, or potentially go up? And this is all about portfolio composition, a very good thing to focus on. And how in sync are you with the market? Do you have the Midas touch or the Medusa touch? The market is always desynchronizing all participants, and this is a key thing to understand. Nobody can stay synchronized 100% of the time. You don't need to. You just need to understand when you're becoming desynchronized. Why is that? Because the desynchronized pay the synchronized inside all financial markets. A lot of people would say, Ken, the stock market is green, the crypto market is red. They're decorrelating. Crypto is decorrelating from the stock market. You can see this green line here. That represents the S&P 500 futures. Can you see any decorrelation? No, it's basically just moving together from a directional stance. But you might say, but Ken, you can see that the crypto market came down and the stock market came up. Surely they decorrelate now. Sometimes Bitcoin moves before the stock market because it's a really risk-on asset class. We do not require certainty as professionals. We just require the stacking of probabilities. And we understand that things don't move perfectly in sync. When things move perfectly in sync, people are seeking certainty. That's a very, very dangerous thing to seek out in financial markets. You'll see people do this all the time. They'll try to just take one part of the market action, the elephant in the room, and they'll just analyze one little tiny weeny part of it, perhaps the tail or the foot, and they'll make a story about it. We just don't do that with the CTKS method, and that is a standards-based process to reveal smart money buy and sell levels from any price chart. We do not use recent indicative price or RIP. Recent indicative price is really easy to spot. You can see resistance and support lines just drawn from current price action. We draw it from all of price action. Does this take time? Does this take more time than just drawing a line at current price action? Of course it does, but it's worth it because your money is on the line. And it's really important to break through SBA or story-based analysis. Stories come from looking at a very, very small part of price action and then just making a wild conclusion. Instead, we use ODMS, Objective Dynamic Market Structure, and we have Stanfield levels, which are Dynamic Market Structure levels. The CTKS method literally updates 270 years of candlestick analysis. And instead of seeing the market like this, we see the market like this, as it's supposed to be seen. We can see that the current smart money buy level is at 16,653. Bitcoin is currently trading at 16,792. What has actually occurred in the stock market is when we look at the S&P 500, it came into this smart money buy area, and we've been talking about this smart money buy area for several weeks. You can see how incredibly important it is to understand objective dynamic market structure. That is formed through the CTKS method. If you didn't have this information, you'd probably think, well, price is coming down. It's going to go to zero. The markets are going to crash. Everything's going to burn. And then suddenly you figure out, oh, there's all this smart money buy. It could get caught there. If it doesn't get caught there, there's this particular area. But that shows price is weaker. That's not as good as if it gets caught here. And we can see that's exactly what happened to the S&P 500. And that's the reason that the markets are green. If you want to know what smart money knows, just simply learn the CTKS method. It has a proven track record, and it will give you actionable insights on when to buy, how long to hold, and when to sell. In the main market, in the last trading session, we saw the VIX, the fear gauge of the market, retrace. That actually pushed indice prices up, and there was a corresponding increase in risk appetite through junk bonds. The news will tell you that the US market was bolstered by consumer data. And we can see that consumer data, consumer confidence did come in hotter than expected, 108.3 versus the expectation of 101. Now, does this really mean that the stock market should rally? Not according to the Fed. The Fed does not want consumer confidence to go up. It wants demand destruction. It wants people to lose their jobs. Why does the Fed want this? Because the labor market is so tight. It's really, really strong. And what do federal bankers do? What do the central banks do? Well, they rely on economic theory. What is economic theory? It's the study of scarcity. What's scarcity? It's choice. You can either have A or you can have B, but you can't have both. Oh, naughty, naughty. In the 1950s, A.W. Phillips actually did a statistical analysis, and he plotted a lot of different data points against unemployment and wage inflation, and he found that there existed this curve, which you can see here, and he named it the Phillips curve. And it basically says, if you want to bring down inflation, it's simple. Just push up unemployment. What a rampantly simplistic idea, and a rampantly scarcity-based one as well. So when you see consumer confidence just going through the roof, this is the Fed. The Fed is now sweating. It's literally saying, oh no, people are confident about the economy. We want them to be rampantly pessimistic about the economy. We want them to actually lose their jobs. So when we look at the next FOMC meeting, the probability of a 25 basis point increase is currently 70.1%. But I believe that if confidence keeps on increasing inside the economic market, that's going to push to a 50 basis point increase or even a 75 basis point increase. A lot of people were talking about the possibility of a Fed pivot. The Fed cannot pivot yet. When you see headlines like this, it's important to understand the underpinning dynamics of the market. Some other dynamics. China is getting really badly hit by another C-19 wave. COVID surge hit Shanghai with crowded hospitals and empty streets. Pharmacies have literally run out of medicine. China is the world's factory. It's basically the place that companies have outsourced all their major work to. When the factory closes down, the companies don't have anything to sell. So Chinese cities, factories are telling people with COVID to go back to work. COVID positive workers will fuel the spread. A lot of people believe C-19 has just mysteriously vanished. It has not. Globally, 3.5 million cases in the past 7 days. The greatest number of cases have been recorded in Japan, followed by South Korea, France, Brazil, the US, Germany, Hong Kong, Taiwan, Australia, Argentina, Italy, and Russia. And you can see China is all the way down here at point number 18, and it's had a 30% decrease on weekly case change. This is crazy. The Chinese government data on C-19 has never ever been accurate. That's why we need to actually look at what is happening on the ground. When pharmacies run out of medicines, when people are being forced back to work with C-19, it tells a story. China's market was recently coming up on the hope and the thought that China would be reopening. That's pretty much been quashed. And this will affect all asset classes and all market indices because after all, if the factory closes down, how can different companies globally produce their goods and sell it to consumers? That's why a lot of data goes underneath these charts. When people say only trade the chart you view, you're actually viewing all of these different charts rolled into behind your chart that you're trading. You must cast your eye very wide if you are to understand the market. And we can see that oil is staging a bit of a return, but it's still under resistance. Bond yields and bond prices, bond prices are just normalizing. Bond yields have a little bit of a leg up. We can see the dollar just trying to consolidate, just starting to turn around. We'll dive into this. And we can see gold had done very well the day before, but it's just retracing some of its gains. It's very important to understand where smart money will come into the market and to support price. These smart money buy levels down here in the dollar are very important. If the DXY goes up, we expect it to throw negative price momentum on the major indices, and that includes Bitcoin and your beloved cryptos. We can see that the DXY is just hovering around a smart money buy level at 104,113. It's currently 104,208. A lot of people have been cheering on gold, and what's not to cheer? Gold is great. The concept is under the gold market, when we look at the gold futures, there's been so much overhead resistance at that 829 and 832 mark. If you didn't know the internal market structure of gold, you just simply wouldn't know this resistance existed. It would look something like this, and people would draw up all sorts of fantasy stories around recent price action, just examining a little portion of the price elephant. Please don't do that. You need to see the market structure. That's what will make the difference for you to join smart money. You can see pretty clearly here that this overhead resistance is where the sellers are coming in and pushing gold's market price down. If you want to know what smart money knows, simply pop across to the CTKSmethod.org and start learning all about the CTKS Method Standards Certification process. Before we talked about the CTKS code, we know that the market came down, the crypto market came down today, so that's the current market. You put a D there. This divider is just basically just a pipe which divides yesterday's action from tomorrow's. This just gives you a bit of context, and it's really important. What do you think the market will do tomorrow based on what we've actually seen? Remember, you don't want certainty, you just need the probability. Let's keep on stacking probabilities, and when we look at total crypto market cap, we can see there's not a lot of smart money buy support. Literally, the entire crypto market is gaining its support from Bitcoin, and this is what it does. If you were just looking at this chart, you would miss the point that Bitcoin is responsible for this particular chart's directional price action, and we can see that the current crypto market cap is 768.3 billion. Masterclass students, you get my live chart in TG34. We can see when we look at the Bitcoin longs against the Bitcoin shorts, the shorts are not quite sure what's going on with the market. They're losing confidence. The longs are not far behind them either. They're also unsure. We can see that we've had a lot of long liquidations, but the shorts are starting to get liquidated. Just starting. Looking at the magnitude of long and short liquidations is really important to do, and we can see, whoa, this is so small. 14.62 million in total liquidations across 8,504 positions. Just tiny. And when we look at the past 24 hours, we see about 69% of total liquidations were long. What about the past 12 hours? About 75% long. Past 4 hours, 84% long. And the past hour, yeah, it's starting to turn around. 74% short. It's starting to go the other way. But look how tiny it is. It's just so small at the moment. It's literally less than weekend trading. Crypto continues to be in the news for the wrong reasons. Crypto giant Binance offers little transparency after FTX collapse, says the Wall Street Journal. Bitcoin miner Core Scientific files for Chapter 11 bankruptcy. Sam Bankman-Fried is not free. He is on extradition to the US. He just doesn't like the Bahamian jails. And the FTX founder is to be transferred to the US to face criminal charges. The thing to note with FTX, SBF did the wrong thing, and that's why he's facing criminal charges. It's not the fault of crypto, it's the fault of SBF. We can see that the crypto market came down in accordance with Max Payne. That sometimes happens, sometimes not happens, so just be careful, don't rely on it as a certainty, but it is a probability. Crypto platform Paxful removes all ETH from its marketplace. Not too good. And Accenture reports that 1 in 5 own digital currency. That's pretty good. Alaska adds virtual currency to its regulatory regime. Coinbase is expanding. It's actually secured a virtual asset service provider registration in Ireland. Bitcoin miner Northern Data says it has no financial debt and expects 204 million in revenue for 2022. Well done, Northern Data. Bitcoin fails to retake 17,000 with the market not prepared for the dip. Hey, but we were prepared. The greatest gainers over the past 24 hours, helium rocketing up, or floating up, 33%, well done. TON up 6%, Ethereum Classic up, Decred up, Rune up, and Ape and Convex Finance, but just up a little bit. The greatest losers, Chain, just sinking again like an anchor. Trust Wallet coming down, USDN, LDO, APT, Synthetics and Lunacy, all amongst the greatest losers. Checking out comparative performance can be a really smart and professional thing to do. When we look at Bitcoin over this time period, it came up 0.31%. Go Bitcoin! But what about Ethereum? It came up nearly 3%. Oh, Bitcoin, you're so slow. I've popped the stable coins in here, Tether, Circle, and Binance Coin, to give us some concept or perspective if they're depegging. They're not currently, this is just normal variation, so all systems go at the current time. BNB up 0.53%. You can see BNB just following Bitcoin's gravitational alignment. You can see what Bitcoin's doing, the blue line. It shows you what Bitcoin has done in comparison to BNB. When we look at XRP sold down quite dramatically or traumatically, and it's been moving in alignment with Bitcoin's gravity, starting to actually resurge at the moment. Well done, XRP. Doge came down very, very hard, like XRP came down hard, and trying to get back to Bitcoin's gravity. In terms of market capitalization, we saw a big exodus from Binance because of all the news that Binance could be the next FTX. So people were undeniably concerned, and that's a good thing to be in the crypto market. And we can see that Tether is starting to come up. As we've learned from FTX, Celsius, Voyager, so many others, it's really important if you get an inkling that things may not be correct, just take your money out of that particular platform and go and throw it on a cold wallet, a hardware wallet, or just a more dependable exchange. It just really comes down to you. But the thing is, you should act on these things. If in doubt, please act. ADA, we can see ADA has come down significantly, but we also know Bitcoin's gravity cannot be denied. We could start to see ADA turn around here. This could be really quite interesting. It doesn't mean it's going to turn around today, and that's the key thing. When I say turn around, I mean turn around over the next couple of days and fill this gap. We'll keep our eye on it. Matic has come down 12%, but it's just moving in alignment with Bitcoin's gravity, but much more weakly. This is DAI, the stable coin. We can see DOT way under Bitcoin's gravitational pull. This will snap back at some stage, as will ADA. So keep your eyes on this. Look at Tron. Tron has been doing so incredibly well. And a couple of community members in the comments have some ideas on why that might be. Please read the comments. It's really, really cool. What about SHIB coming down 7%? Litecoin just aligning with Bitcoin's gravity. It almost looks like from a short-term perspective, Litecoin may be starting to get really light. It may start to challenge upward price momentum. Let's see how it goes. And Solana very much weaker than Bitcoin's gravity. This is why you want to keep your eye on this directional association between Bitcoin and your beloved alts. And thank you to Planet Pro, who said the CTKS method too is a game changer. I know exactly where to buy and sell. Guessing is out the window. I have way more confidence and now need to focus on getting in sync with the market. Highly recommend the CTKS method. Thank you, Planet Pro, for your very kind words. If you're not inside the masterclass, you'll want to pop over to ctksmethod.org. And there is a very, very special discount on level 1 and level 2 certification. But you also may like to register for the CTKS method service. That's where, and I explain it in this video, these are the ones that are going to be released as part of the service. These are the ones that are coming. But over time, the plan is to cover everything that you want to see. So if you want to see something specific, please let me know in the comments. The beautiful thing with this service, you don't need to mark up your own charts. I'll do it for you. To beat Jerome Powell and show that abundance is definitely here, you can lock in the very, very low price of $39 per month. You don't have to ever see a price increase. And this is for the institutional grade analytical service. There will be other tiers, but the $39 per month will be the top tier. That's my promise to you. I'd like to let everybody know that I actually posted a video for the Coffee Club, and a very kind thank you to Dan. Very grateful to have found your channel, and of course very grateful to Kate and yourself for the kindness and inspirational work ethic. Merry Christmas. Dan, you're so sweet. Thank you, my friend. And thank you so much to Bruno and Vicente as well. Very kind of you, my friends. And of course to Bluebird. I released a post yesterday, and if you're a supporter, you just come across to the post tab, and then you can just scroll down. It's rule 916, and this is a new rule. I spread the rules out all over the place. It's to focus on abundance and not scarcity. And if you look through these previous videos, you'll see a lot of different rules actually covered off inside the Coffee Club videos. This is just something that I do each month. And I was a little bit delayed last month because of the enormous amount of work that had to actually go into level 1 and level 2 certification. So my apologies, my friends. But rule 916, I did 2 videos inside this one, and I've already received a lot of very, very beautiful messages from people. Thank you so much, everyone. I'm so glad it's helped out. Part of the CTKS method is the CTKS Creed, which primes our mind for profitability and happiness in life. These are a series of positive affirmation statements you just say to yourself. They're important because they get rid of fear and install courage. Acting on fear creates the fear. We don't want to do that. We need to act with courage, but also knowledge. Here is the creed. I know the universe wants me to succeed. Every day I show kindness, integrity, and gratitude. I know opportunities in life reset daily. I am worthy. I go slow to go fast. I start small and scale with BORSOG. Life pullbacks give me the strength for the next life rally. I am dedicated and committed. I win or learn and never blame. And I never let a problem beat me because I solve it with positive excellence. If you have family or friends who could benefit from positive excellence and what we do here each and every day, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. Stay safe out there, my friends. Take care and see you tomorrow. Bye for now.